Yeah, well, I mean, I want to say emphatically, Oliver, that there's more than one way to skin the cat. And there are a lot, I talk about the things you can't do. You can't make macro forecasts repeatedly successfully. You can't trade algorithmically. So then what's Dan Druckenmiller doing? And what's Renaissance doing? There are people, all the things I say you can't do, there are people who've done them extremely successfully. Trade commodities. Who's Paul Tudor Jones? There are lots of ways to be successful. And I always talk about the importance of risk-controlled investing. There are high-risk investors who've been successful. So I think the key is, number one, to have an approach, well thought out, built up, hopefully over some years or decades. Hold it strongly. As the memo says, be willing and able to hold through the periods when it's not working, because nothing's going to work. Nothing works in every market. Nothing works in every stage of the cycle, and nothing works every year. Even in, if you're in an upcycle, it should work. It didn't work. I was struck in Barton Bigg's book, Hedge Hogging. He talks about some outstanding investors who had terrible periods in the doghouse. If you hold a philosophy strongly and an approach, no approach is going to work all the time. And the more strongly you hold your approach, that means the more out of favor you're going to be in certain times. So it's extremely important to hold that. So a well thought out, valid approach that you're committed to and can stay with. I think you have to have an approach that fits your personality. I was lucky in '78. I was asked to start up some bond funds in convertibles and high yield. I'm a conservative investor. It fit me very well to be investing in fixed income. If they would have said to me, we want you to go out to some place called Silicon Valley and start a venture capital fund, we want you to find Google when it gets invented, I probably couldn't have, because I'm not a futurist and I'm not a dreamer. And I'm probably better at sealing off the downside than finding the upside. So I think you have to, like they say in football, is he playing within himself? Is he doing the things he can do? I think it's very extremely important for an investor. So I think the people we're talking about are people who have these approaches strongly held. I think it helps to be highly intelligent. Buffett says, if you have 160 IQ, 30 points because you don't need them, sell 30 points. I don't think that's true. I think that high intelligence is very important, and I think the people that I mentioned are all extremely intelligent. I think that those are some of the criteria for success.